It was funny as fuck. They just suspended my live stream because of damn an hour-long live stream suspended because of the music I was playing. Copyright infringement. Thanks, YouTube. Appreciate it. So now I can't even play no more music because it's copyrighted. I mean, out here promoting Rod Wave, man. And I'm talking over it. Bunch of haters, bro. But we're back. So, like I was saying, SPY looks like it's turning back around. Um, this downtrend is not going to be a continuation of the downtrend. It looks like we're going to push a whole lot higher. This breakout is a false breakout. It's leaving a bottoming tail. That means a buyer stepped in. And now we might see this progress higher within the next couple of days. Obviously, there's no more trading days this week, so that's going to lead into next week. So we might see this gap higher Monday, and then the continuation will be Monday, Tuesday. Wednesday is usually Wednesday, especially when the week starts off like this. Wednesdays are usually like the consolidation days. So it's a day that even if it does gap higher, there's a likelihood of retracement, or there's a likelihood of gapping higher and then just being, entering a consolidation the entire day where we don't move anywhere, where we don't do anything. And it just eats away at time decay. So whatever options we do enter next week, ideally we will want to be out of them by Wednesday. Looking for something quick, a quick 100%, a quick 200% return. Something that we could be in and out. This Wells Fargo is gearing up for a put entry right here. But since it's so late in the week, I mean, there was only literally 1 hour left. I wouldn't enter into this right now. And also, um, any contract, especially a put contract, leading into next week, is going to be very, very hard to get our money's worth from that contract. So this is something that we'll have to stay out of it for right now. But for the most part, you can see that the market it has found a support for this week, or for the sell-off that has been going on the last couple of days, and it's trying to bounce back. So best case scenario is an open green open on Monday morning. Exxon, same thing. See, these are two we entered actually 2 days ago. Time decay did its thing. We didn't get our money's worth. That option is worthless now. But now it's gearing up for another possible put entry. This could very, very likely open very in the red on Monday. But once again, since the contract is for next week and the VIX is so high, um, that'll make those option contracts probably the spread is going to be way too far in between them. I mean, the strike is going to be way too far, and it's going to make them a little bit way too expensive, therefore making them hard to gain value. For example, a 100% return in a contract with expiration next week, buying it today will probably take this stock like a 3% or almost 4% negative day for you to get your money's worth. So it's yes and no. It's honestly, it depends on the person. But here you go. We found support. Unless buyers step in the last 10 minutes or the last half hour of trading, this is probably where markets are going to close for the day. Like I said, we'll see the continuation next week. I'll leave you guys back with some Bloomberg. I hope you guys have a wonderful Friday and enjoy your weekend. I'll see you guys um, on Monday morning. Peace.
Meet Russian Foreign Minister Sergei Lavrov next week under the condition that Moscow refrains from attacking Ukraine. With inflation taking hold in the U.S., the Biden administration and lawmakers have been looking at ways to address the issue. One suggestion has been to temporarily lift the gas tax. But former Treasury Secretary Larry Summers tells Bloomberg that's plumbing the depths of new bad ideas.
I think there needs to be a lesson learned about gimmicks that poll well. They're like sugar highs. They make you feel good, but they really often don't redound to anybody's substantial political benefit.
Summers says taking a gas tax holiday would hardly be noticeable to consumers and could spur inflation for other items as spending shifts. Summers spoke with David Weston for Bloomberg's Wall Street Week, which airs tonight at 6 Wall Street time on Bloomberg Radio and television. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons, Tim Stenevec, and Katie Greifeld. We are live in the Bloomberg Interactive Broker Studio in New York. Katie, a story that crossed late last night that I must admit I was actually still awake, and I read it as soon as it crossed, is a Bloomberg exclusive from our team, including Sri Natarajan, Jillian Tan, and Hema Parmar, about what's been happening with block trades, and the relationships at Morgan Stanley are snared now in a probe.
And this probe, this article describes it as a sprawling probe. And so just to back up a little bit, block trading, it's one of the few Wall Street businesses where relationships still drive the flow of deals. And the concern here is that, these banks might have been improperly tipping off investors to stock sales before they happen, because these block trades, they can really impact stocks. And you see it too in the bond markets as well. Treasury blocks go through often, and that's worth, a basis point or two often. So that's important information.
Yeah, over this past week, Bloomberg reporters have had a lot of stories on this. So if you're interested, definitely go and check this out. The latest iteration of this focuses on Pawan Passy, who worked the phones inside Morgan Stanley. Ever since his arrival after university back in 2004, he rose to become a chief communicator with investors buying and selling big blocks of stocks. As you mentioned, Katie, it's a business that dominates on Wall Street. In November, his chair suddenly went empty at Morgan Stanley's headquarters overlooking Times Square, and the whispers began spreading. The bank had put Passy on leave, and the feds were poking around.
Yeah, and the Justice Department, it is seeking access in some cases to online chats, mobile phone texts, emails, and messages sent by apps, according to people familiar with the matter. They're also looking at Passy's frequent phone contacts, and some of Morgan Stanley's key clients are just among the roster, which includes more than a dozen executives at other investment firms.
Really important to note here, no one has been accused of wrongdoing. Still,
put progress in your portfolio. Invest in sustainability with 3 new funds from Fidelity.
Still to dominate. Bloomberg Business Week. This is Bloomberg Radio.
Cherry Production.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Choppy session. A few minutes ago, we almost had unchanged or little changed on the S&P 500 index, but right now, red on the screen. We have got just about 43 minutes to go ahead of the closing bell. Let's find out what's moving markets as we head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks in the red, but off their session lows. Dow's down 120 points, was down 325. S&P's dropped 17, while the NASDAQ is back down 111. The U.S. 10-year yield at 1.93%. Gold is down 4. Oil is in the red, and Bitcoin is trading lower by 1%. Among the main 11 S&P sectors, leaders were materials and consumer staples. Energy and industrials were under pressure. Leaders to the upside in the Dow, Cisco and Coca-Cola, while Intel and Boeing led to the downside. And after earnings, Roku plunged as much as 29%. In other news, Deere said that supply chain unpredictability is weighing on its outlook, and GE plunged intraday after warning of supply chain pressures through mid-year. Wrapping things up, the Ford CEO is considering ways to run its EV business separately. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal, I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, we love to do regular check-ins when it comes to crypto. It's certainly something that we talk about each and every day on Quick Take Stock. Katie Greifeld, who's joining me right now, we co-anchor that each day at noon Eastern Time. You can watch that at Bloomberg.com/QT. Someone who joins us all the time on Quick Take Stock is Juthika Chow. She's head of OTC options trading at Kraken. She joins us on Bloomberg Business Week Radio this afternoon from New York City. Juthika, how are you?
Hey guys, good. How are you?
We're doing well, getting ready for this 3-day weekend. But before we get there, we got to do a deep dive into Bitcoin and what's been happening with crypto. Bitcoin down about 1.5%, really testing that $40,000 mark. We ask you all the time, Juthika, to explain the volatility here. Why are we seeing this recent sell-off when we were testing $44,000 recently?
Well, I think the crypto markets and Bitcoin in particular have been seeing a little bit of a lack of conviction as it relates to Bitcoin. You know, a lot of the long holders are already long, and I think some of the bears have paired their positions, and so a lot of people are on the sidelines, and that's kind of resulting in Bitcoin just moving with the broader markets, but sort of following the trends of the NASDAQ and what's going on globally without some of the more Bitcoin-specific factors at play. And so I think that's kind of what's driving it right now. We're definitely seeing more interest in other kinds of trading like options and derivatives and yield plays. But I would say in terms of the spot flows that we're seeing on the OTC desk, it's actually more money on the sidelines and not a lot of conviction in the spot space right now.
Well, Juthika, that's what I want to talk about is that, you know, you are seeing a lot of interest in trading. I mean, if you look at the NASDAQ 100, like you said, if you look at options and derivatives, there's a lot of activity there. Not a ton when it comes to crypto, though. I mean, if you look across exchanges right now, crypto exchanges, that is, you have seen trading volumes drop. And I'm curious, you know, if this sort of malaise is to continue, where, you know, we're sort of range bound, sort of trading sideways. Is that ultimately bad news for crypto? Because, I mean, at least when it comes to some of the people I follow on Twitter, it seems like the volatility is part of the fun.
I mean, there's no question that volumes are inversely proportional to volatility. So if you looked at when we had the bull run, it wasn't just the fact that Bitcoin was going up, but the volatility it was realizing was north of 100, and that was sustained for months at a time. And that was definitely good for volumes and activity and kind of building momentum. And I think like real economic momentum. And momentum goes both ways, kind of like inertia. So if things sort of stop moving, then people stop talking about it. And I think that definitely comes into play. And we're seeing that with Bitcoin sitting at a 60, 70 vol. The other aspect is that it usually is relative to what the other opportunities are. And so to the extent there is volatility or relative volatility in the stock market, then capital might be deployed there instead. The one thing I will say is that on the option side, we do see we're seeing very healthy flows and activity, and I think part of the reason there is because with options, there's a wider range of more nuanced positions and bets that people can put on, different kinds of yield plays. So it's not as simple as just buying or selling. But yeah, there's no question that overall, as we want dampened volatility as a sign of maturity, when it comes to trading volume and activity, it has the sort of quieting effect.
And something I think about a lot is that there seems like there's no shortage of enthusiasm in the broad brush crypto space. If you think about all the enthusiasm around Web3, around DeFi, around the metaverse, but it seems like that isn't translating into the price of Bitcoin at all. So I'd love to hear your thoughts on whether we're sort of seeing, I don't know, maybe a bifurcation in the space, maybe something not as strong as that. But again, it just seems like there is a lot of enthusiasm and things to get excited about in the broader cryptocurrency universe, but not necessarily when it comes to the prices of the coins.
Definitely. And this is something we've seen over the years. The price of the coins is often driven by whales, by very large, healthy accumulation, unhealthy accumulation. It's really, the price action can deviate sometimes from what we're seeing in terms of like the fundamentals on the ground. And I think if I look back to like 2017, that happened in maybe more of a negative way, which is that price was appreciating extremely rapidly, much more than some of the actual progress that we were making in terms of building out use cases and protocol development. Now one could argue it's perhaps the opposite. There's price is a little bit lackluster given some inflation concerns, but there's more going on in terms of building, investment in the space, hiring in the space from traditional finance and tech. And so I think a lot of these things we'll see play out over the course of years as companies are built and use cases are built, and it's not necessarily reflected in price because those dynamics are a little bit different.
Hey, Judika, we only have about 40 seconds left with you, but I'm wondering, when you think about the crypto universe, what is it we should be focused on? What's it that our investor audience should be focused on in terms of catalysts moving forward?
Well, I think right now there's definitely pay attention to the macro environment, mostly in terms of volatility, but also in terms of inflation. I think with the three of us have talked a lot about whether or not crypto is an inflation hedge, and at some point the tides will turn and it actually will become an inflation hedge. And I think being positioned right at that time.
The question is when.
The question is when. I mean, we've had plenty of hot inflation prints. Haven't really seen too much of it into crypto lately. But to Judika's point, it seems like a tech stock.
Judika, ciao.
Oh, I'm swimming in your ocean. Give you all of my devotion like nobody, like nobody. You got me dripping in emotion. Imagination overflowing with your body, with your body. You know that I ride and I die for you. You know I got nothing to hide from you. You know I got space in my life for two, yeah, yeah. Got a lot of love, but it comes with fear. Cause if I get hurt, I don't think I heal. I need you to need me loud and clear, yeah, yeah. So can you kiss me like you're dying of thirst and I'm water? So can you kiss?
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld live in the Bloomberg Interactive Brokers Studios in New York. 21.2% to the downside. That's what shares of DraftKings are doing right now. In just a couple of minutes, we're going to hear from the company's CEO, Jason Robins. He sat down a little earlier with our friends at Bloomberg TV. We're going to get a clip of that interview in just a minute. First, though, we are less than a half hour away from the close of trading on this holiday weekend. Charlie Pellet, what's it looking like?
Oh, what's it looking like is we're betting on a close that will be substantially lower. We've got the Dow, the S&P, NASDAQ all dropping right now. Just about the top of the hour, we were making a run for unchanged. Didn't happen. Right now, we've got a sell-off underway. 28 minutes to go ahead of the close. S&P down 36. Drop right now of 0.8%. We'll give you the why in a moment, but you know the reasons. The Dow down 286, down 0.8%. NASDAQ slumping 183 now, down 1.3%. NASDAQ 100 index down 1.3%. Russell 2000 down 0.9%. Dow Transports have been higher, now lower by 0.3%. So to give this some context, right now we've got the S&P down 37, down 0.9. Worst level have been down 53, drop right now of 1.2%. Stocks dropping, bonds climbing at the end of a jittery week that's been marked by a standoff between the West and Russia, as well as those ongoing concerns about the Federal Reserve's next policy steps. Again, that 10-year yield, 1.92%. Spot gold down 0.2%. $18.94 the ounce. West Texas Intermediate crude down 0.4, $91.41 a barrel. For WTI. California Governor Gavin Newsom has announced the first shift by a state to an endemic approach to COVID-19, and he's calling for vigilance over mandates. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he told us this morning he is advocating caution.
You know, schools are the big question right now, with vaccination rates not being very good there, and that environment of having lots of people in small spaces together being one that runs a risk of high transmission. I think we really have to be careful about those types of situations. So the take-home is look at your situation and address some of the easy concerns that you can make to try to limit transmission. But there really is, in many parts of the country, no reason not to start thinking about moving towards that normalcy again.
That's Dr. Andrew Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks, all lower right now. Pfizer down 0.9%. Its German partner BioNTech, its ADR is also down 0.9%. AstraZeneca's ADR is down 1.8%. Moderna slumping by 1%. Johnson & Johnson down 1.3%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Remarkable to see the way the equity market's jumping around on this Friday afternoon. Well, speaking of jumping around, shares of DraftKings lower right now by more than 21%, falling the most in almost 2 years after the company added fewer new customers in the fourth quarter and projected a wider loss this year than Wall Street had expected. CEO Jason Robins sat down just moments ago with our colleagues on Bloomberg Television to discuss the company's earnings. Bloomberg's Taylor Riggs kicks off the conversation. Check it out.
Jason, maybe first off explain sort of the difference of what you're seeing versus what the street and maybe the market is getting wrong today.
Well, I think that what we're seeing is that the playbook that we set out from the day we went public has been consistent and is working. We've always targeted 2 to 3 year paybacks on new customers, 2 to 3 year paths to profitability on new states that we launch. We haven't changed that at all. We've continued to execute against that. If anything, we've been seeing more favorable results. And obviously, there's been a lot of new states launching. And I think what's going on is there's just a large, rotation out of unprofitable growth stocks. And a year ago, everyone was saying, grow, grow, grow. We love it. And now they're saying they want to see stemmed losses. But I think good companies, if they have a playbook that they know is working and they're well capitalized to do so, they stick to that model. And that's what we're doing.
And fair enough, and we've seen other companies go down that same road. That's not without cost, Jason. I mean, your ads are everywhere. You can't really go anywhere without seeing a DraftKings ads. That has to be adding up with regards to costs. How do you keep that under control, if at all?
Well, it's the same story. We look at data and analytics for everything. If we're seeing that, paybacks are within our 2 to 3 year threshold, then we believe it's good spend, and that's what we manage to. And that hasn't really changed since we went public. So we continue to, I think, see the model working. We now are up to 5 states in 2021 that are contribution profit positive. There'll be another 5 for a total of 10 that we expect to be contribution profit positive in 2022. So I think that shows the paybacks are right in line with where we'd like them to be.
Jason, speaking of spending and growing, since you guys walked away from that Entain deal, there's a lot of questions about what your M&A strategy could look like moving forward, and also what that might look like in such a volatile market. How are you thinking of this and the significant amounts of capital to be deployed moving forward?
Well, I think that for us, M&A is very much, driven by strategy. And of course, it's harder to do in a volatile market. It's harder to do when your stock price is lower. So that certainly will affect the types of things we look at and the likelihood that we would end up pursuing anything. We're very excited about the Golden Nugget transaction, which we expect to close soon. That's one that we feel will be very accretive and have very strong synergies. And I think generally we're more focused on organic growth than M&A right now, but there's always an opportunity if the right deal comes along to take a look at it.
Let's talk about the organic revenue growth. You've talked about the New York, Louisiana markets. We're looking at new potential in Maryland, Puerto Rico, Ohio. What do those new markets sort of present for your top and bottom line?
Well, I think it's another collective, I want to say 7, maybe even higher percentage of the population. So obviously that adds to, an already, fairly large number of states and large percentage of the population that has online sports betting. I think that those, states all have very passionate fan bases that love sports, so they should be good markets for us. And we're looking forward to going and giving a great product experience to customers in each of those states.
What about some of the partnerships out there with the various sports leagues as well as some of the networks that broadcast those games here? Is there any sense here that you would want to deepen those partnerships or go even further to actual ownership of some degree of it or another?
Well, we're always looking at ways that we can form creative partnerships. As far as whether any of those translate into something more such as M&A, it's hard to say. But we're very pleased with the partnerships that we have with the various sports leagues. We have partnerships with really all major sports leagues at this point. We're also very pleased with the media and team partnerships that we have. For the most part, they're all performing very well, and we're excited that we have such strong support and a very strong ecosystem that we built up around DraftKings.
Well, there you have it. DraftKings CEO Jason Robins just about an hour ago with our team on Bloomberg Television. A lot of headlines from that, Katie. I should mention DraftKings stock down about 21.2%. Really been lower all day after the company reported that it added fewer new customers in the fourth quarter and projected that wider loss than Wall Street had expected. Here's what's interesting. 2 million monthly unique paying customers engaged with DraftKings during the fourth quarter. That's according to the company. Analysts were only looking for 2.1 million, so it wasn't that big of a miss there. We're going to have more on DraftKings in a few minutes, though. First, let's get to Washington, D.C. with Nancy Lyons. Hey, Nance.
Thanks, Tim. Moscow says it is planning to hold nuclear exercises to test ballistic and cruise missiles, and President Vladimir Putin is expected to supervise. Well, that's all renewing concerns Russia plans to invade Ukraine, despite arranging a diplomatic meeting next week with U.S. officials. President Biden will be addressing this situation in a speech at 4 p.m. Wall Street time today. You can listen here on Bloomberg Radio. Well, the nation's top health official has tested positive for COVID-19. Bloomberg's Nathan Hager has the story.
Surgeon General Vivek Murthy confirmed his positive COVID test this morning on Twitter. He says his wife tested positive as well, along with their 5-year-old son. This week, White House Chief Medical Advisor Dr. Anthony Fauci said the COVID pandemic in the U.S. appears to be on a sharp downward path. Dr. Murthy says his son has a runny nose and a low-grade fever, but is otherwise eating, drinking, playing with his sister, and watching his favorite cartoons. In Washington, I'm Nathan Hager, Bloomberg Radio.
The ex-police officer who shot and killed Dante Wright was sentenced today to 18 months in prison, 6 months on parole. Kim Potter says she mistook her gun for her taser when she shot the 20-year-old during a traffic stop. Wright's mom, Katie, says the sentence is a slap on the wrist.
We're very disappointed in the outcome.
Katie Wright says Officer Potter's tears must have had more of an impact on the judge than her own. Prosecutors wanted at least 7 years. Well, with no deal in sight, Major League Baseball has canceled spring training through March 4th due to the ongoing lockout. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Katie Greifeld and Tim Stenovec live in the Bloomberg Interactive Broker Studios. Katie, I've been dying to talk about this story, but first I want to ask you a question. What were you doing, this morning around, 7:30?
I was prepping for this radio broadcast. What were you doing?
Oh, okay. Well, I was tuning into this YouTube channel that live streams planes taking off and landing from London's Heathrow Airport. And I got to tell you, I saw this trending on Twitter. I wasn't even trending on Twitter, actually. I saw people tweeting about this.
Yeah.
And they were saying, so many people are tuning in. Somebody tweeted this live link, and it was pretty remarkable because there were wind gusts over 61 miles per hour generated by Storm Eunice. And throughout the time that I was watching, you saw planes trying to land in these extreme winds. And it was pretty remarkable because they would come in what appeared to be at an angle, and you would see them absolutely just these huge, multi-ton machines sort of being pushed through the air on their way down to the runway.
Yeah, that's Storm Eunice. She is no joke. And I just love when the internet in general unites over a common cause. In this case, watching these jets try to land. And Big Jet TV, that is what this channel is called. It's run by an enthusiast whose name is Jerry Dyer. It saw as many as 230,000, or I can't say words, Tim, 230,000?
230,000.
Okay, nailed it. That's how many viewers it had at one point, as people just watched this Airbus SE A380 double-decker. God, I'm really stumbling today. Try to land. And
obviously, you're not a pilot.
I'm obviously not a pilot, obviously. But yeah, I saw those tweets too. I don't know how I haven't actually seen the video at this point.
Well, it's funny because right when I tuned in, I got to see that Airbus SE A380 double-decker flying in from Doha by Qatar Airways. It was attempting it did its
investing in change was like a glimmer of hope that re-sparked, okay, we mean this.
Accenture is helping CMHC achieve their goal of affordable housing for all.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are lower, bonds climbing as we race toward the closing bell. 13 minutes to go ahead of a long holiday weekend. Do want to begin with a couple of headlines, though. The Purdue Pharma mediator says the Sacklers have agreed to boost the opioid deal. The Sacklers have offered as much as $6 billion in talks, in those Purdue talks, this according to the mediator. It has been a jittery week marked by a standoff between the West and Russia, along with those worries about the Fed's next policy steps. 10-year yield this Friday, 1.92%. The S&P down 27, down by 0.6%. Have been down as much as double that, down 1.2%, but again reducing that loss now to 25 points. We've got the Dow lower by 185, down 0.5%. NASDAQ is down 145, down 1.1%. Spot gold down 0.1%, $18.95 the ounce. West Texas Intermediate crude oil losing week there, down 0.2%, $91.58 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Inflation, like a full moon, seems to induce a range of manias. A proposal from Senate Democrats to suspend the federal gas tax offers a good example. Revenue from the gas tax goes into the Highway Trust Fund, which is the primary way the U.S. pays for surface transportation. But the tax, which isn't indexed to inflation, hasn't been raised since 1993, and the Highway Trust Fund faces a shortfall of some $160 billion over the next decade. A gas tax holiday would only compound this problem. By one estimate, it would cost the government around $20 billion and hasten the fund's insolvency by a full year. And for all that, it might save drivers a grand total of $2 a week. The Biden administration and Democrats should stop pretending a magical fix to inflation will materialize and instead stick to a simple principle: avoid making things worse. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. Time flies when you're having fun. We are less than 10 minutes away from the market close on this Friday before a holiday weekend. Stocks really bouncing around today, Katie. The S&P 500 down about 0.6% right now. The NASDAQ down just about 1% right now. Interestingly enough, the S&P 500 briefly did turn positive this afternoon, but is again lower. Let's try to make sense of it with Aaron Kennan, co-founder and CEO of Clear Harbor Asset Management. Clear Harbor Asset Management has more than $1 billion in assets under management. Aaron joins us on the phone from Stamford, Connecticut. Aaron, how are you?
Doing just great, Tim. Thanks for having me.
Help us make
Hope
sense
you're
of
doing well.
what we're doing. Well, we have kind of some good vibes ahead of the holiday weekend. I got to be honest.
That's great.
But market not really feeling it. What's been happening here? Because I think a lot of our listeners, a lot of investors, are trying to figure out, okay, when is this choppiness kind of done, and we start to move back toward those highs that we saw in November?
Right. Yeah. I mean that we've been really trending sideways to downward since November, and I think the real story of the equity market is just general weakness, even beneath the headlines, which are weak in themselves. If you look at, whether it's the tech sector, which is seeing significant weakness across the board, particularly in sort of small cap, mid cap, but at the end of the day, we really attribute this to the understanding that the market has, which is this sort of record level of liquidity is finally departing the scene, and that's coming from both the Fed, which is poised to start tightening next month, and of course the fiscal side, which is, for the last 2 years, the fiscal stimulus was the size of the combined economies of the state of California, Florida, Texas combined, and that's essentially gone now. And so you have heightened volatility, and you have less liquidity. That tends to mean that price-to-earnings multiples are poised or at least at risk for contraction. That's what we've seen this year, where the S&P PE multiple is actually contracted 2.5 times, 2.5 points, now trading at about 19 times anticipated 2022 earnings. So while we do expect earnings to grow this year, that higher level of volatility, Tim and Katie, is going to certainly bring pause to investors.
And Aaron, with that type of setup where you are seeing PE multiples start to come down a little bit, I mean, do you view that as an opportunity at this stage, or do you think there's still more of sort of a revaluation to go?
Well, I think the technical backdrop, frankly, is still weak, but that doesn't always guide what we do. We believe in sort of disciplined in dollar cost averaging, depending on the types of clients that we have. But we're also very mindful of valuations across the marketplace. And there are certainly areas of real opportunity that we see even within the equity markets. But it's hard to try to catch that falling knife. No one ever does that perfectly. As they say, only monkeys can pick tops and bottoms. And we sort of embrace that mantra and maintain our discipline across all asset classes for our clients.
Okay, so let's say a new client comes to you, or perhaps a current client that you have has some sort of exit. What's the strategy of introducing those assets into the market?
Well, we think about the long term. Most of our clients are busy professionals. They're trying to simplify their financial life. They're trying to make, they have sort of different buckets of assets, sometimes located all over their place, and it's part of our job to sort of bring some sense to the madness. And so, we're really thinking about, long-term anticipated returns of major asset classes and the mix of those asset classes and the anticipated volatility of each one of those asset classes to allow for them to achieve their long-term goals while also being able to sort of sleep well at night. And so this current market sort of speed bump that we're going through right now, we do think it has a heightened opportunity to last for a while, but it doesn't really change the sort of asset allocation process that we go through on behalf of our clients.
And Aaron, let's get more specific here. So being sure. Disciplined, the asset allocation process, when you look across asset classes from fixed income to equities, what do those different allocations look like? Where are you overweight? Where are you underweight?
Sure. Well, I think fixed income is interesting here because, of course, the anticipation right now is the Fed's going to raise rates 6 times this year and call it 2, maybe 3 times next year, and the curve is quite flat. We have a hard time believing that, particularly when even this week and last week there's been evidence that the economy is slowing down, that the inflationary peaks that we have been noticing over the last few months may be waning. The supply chain picture looks like it's, at least on the margin, improving. Shipping costs have been thawing. Business costs generally have been subsiding. And so we think the Fed may end up proving to be, at least relative to consensus, a bit more dovish over the next 6 to 12 months. And, that has an opportunity, in some sense, for us to maintain some exposure in the front end of the fixed income market. But we're guided by the benchmark, which is the Bloomberg Barclays Aggregate Bond Index. And so we need to always know where we're making our bets on credit exposure, on duration, and how that correlates with other asset classes in the portfolio.
I mean, Aaron, you said that you weren't in the business of catching knives, but when it comes to the front end of the yield curve, a little bit of a falling knife here.
Yeah, I mean, certainly, it's been an interesting market. And while we are sometimes on the margin tactical, we want to be mindful of where our bets are. And we think at 147 right now in the 2-year Treasury, with the market anticipating 6 rate hikes, that 2-year Treasury is pricing in almost a 100% chance that consensus is going to be correct. Our view is that may be just a bit too aggressive.
Hey, Aaron, just in the last minute that we have with you, we got to talk geopolitics here and help us understand, help our listeners and viewers understand Russia and Ukraine and the impact that it's going to have on markets.
Well, it's just another variable that certainly doesn't reduce volatility. It only increases it. Putin's a bad guy. He seems to have aspirations to expand the Russian empire, and this could have a rather significant consequence to the overall market, I think, in a couple of different ways. One, clearly volatility, but on the energy side, that's a huge question around, Nord Stream 2. Is it going to be dead or not? Europe needs natural gas to provide electricity to the population. They've reduced their nuclear capabilities significantly in the midst of having the Russian noose around their neck for the last several years. So it's certainly a conundrum for Europe right now, and it's a real challenge for the world and for investors.
Aaron Kennan, we love it when you join us. Have a great 3-day weekend. Thank you so much for taking the time. That's Aaron Kennan, co-founder and CEO at Clear Harbor Asset Management, over $1 billion in assets under management. Katie, we are just a couple of minutes away from the market close here. In just a few minutes, we are going to be joined by our friends at Bloomberg TV for our countdown to the close, as well as our Beyond the Bell coverage. Stocks off their session lows. The S&P 500, though, still down 0.8%. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Rigg, Sonali Bassett counting you down to that closing bell. Here to help take us beyond the bell. It's our global simulcast partners, Tim Stenovic and Katie Greifeld, in for Carol Masser. We welcome in all of our audiences across Bloomberg Television, radio, and YouTube. Tim, on a day that's certainly going to be a down day, a week that's certainly going to be a down week. The big question now, Tim, is what's actually being priced into this market as we head into a 3-day weekend?
Yeah, that's true. And also, what's the next catalyst to watch for next week? Perhaps ahead of the Fed meeting, what we hear from the Fed about interest rates. We are likely going to be hearing from more Fed speakers. Got to tell you, though, I'm still watching Bitcoin because...
Do we need more Fed speakers?
No, but
I feel like we've heard from a lot of them.
How coordinated do you think the narrative and the message is?
I don't think it's coordinated.
Not very, yeah.
I don't think it's coordinated at all. And I think it's causing a lot of confusion because, hawks are doves, doves are hawks. I don't know. Where are the owls? Remember the owls?